What's going on, everybody? We got some big news in the trucking industry. You may have seen this on some of the guidance, which is going to drastically shape the freight brokerage industry, not the mega brokers. Like all you guys that hate mega brokers, this is going to do nothing to shut any of them down because they already have a ton of capital. This is going to hurt the mom and pop little brokers that are out there that are using, I would call them third-party surety bonds in an effort to get their authority. Now, to try to give a quick explanation of what this all is and what this entails and what's going to potentially happen, we have to talk about what it takes in order to get a surety bond and get your brokerage authority. Now, a freight broker is someone that helps facilitate the transfer of goods from between a shipper and a carrier. They are a middleman, essentially, right? We're not going to go into whether they're good or bad or they take too much money or any of that. We're not going to talk about any of that because it's irrelevant for this conversation. What we are going to, however, talk about is the requirements that are needed in order to get a surety bond or in order to get your freight broker authority. Now, it's very easy and very simple to describe. You fill out an application online, you pay $35 for your BOC 3 filing, and then you file proof of financial stability up to $75,000. That is the limit that the federal government set in order to become a broker. Now, is that a limit? Is that enough money to actually guarantee payment to carriers? Absolutely not. That's like 5-10 loads. It's not enough, and that's why a lot of people are saying we should raise that bar to like $500,000 or something like that, which I would be, a proponent of, because I mean the whole purpose of a surety bond is to assure that carriers get paid for the work they did. Anyway, so the FMCSA has issued new rulemaking that's slated to go into effect not next January, but the following January, which effectively limits the amount of BMC 85 bonds that go out. So there are two different types of two different ways, to satisfy the surety bond requirement with the FMCSA when you file for your authority. One is just getting a surety bond. Those are usually issued by a financial institution. It's kind of like insurance. They quote you for a year and you pay it. It could be anywhere from $2,500, depending on your credit, all the way up to like $10,000-15,000. That is one way to get your surety bond. That's called the BMC 84. Now there's a different one. There's an irrevocable letter of trust. And that's a hard word for me to say, lines of credit, or you put up cash, you put up $75,000. Those are called BMC 85s. Now, this rulemaking pretty much pertains to the BMC 85s, not necessarily the BMC 84s that much. I mean, there's a little bit of carryover, but not much, because most of the companies that are issuing the surety bonds, the BMC 84s, the majority of those companies are, they're backed, but they're a registered financial institution and usually registered as insurance and blah, blah, blah. They're able to operate. The BMC 85s are a little bit different because these are companies that sometimes go up and say, hey, listen, you have a surety bond. You may not have the credit to go out and get a traditional surety bond, but you have that requirement. We will issue you a BMC 85, and for the low price of like $1,500 a month or something like that, all of which the money you lose and you continue paying. There are other ones that kind of operate like whole life programs where you can essentially pay in, say, $550 a month for like 30 years, right? So you end up losing money, but you're actually gaining interest or gaining a principal amount, which you can withdraw once you surpass that $75,000 mark. Now, what the FMCSA is doing is they're saying they're having a hard time proving or liquidating funds from some of these BMC 85 providers, because a lot of them are putting up letters of credit based on real estate, so they're not able to liquidate to $75,000 within the 7-day period that the FMCSA requires. So they are severely limiting who is going to be able to provide these trusts, and they're penalizing, any said trust that does not respond in a certain amount of time. So it's pretty interesting because the FMCSA is basically saying, okay, especially with all the carrier concerns and everything over the past couple of months, the FMCSA is saying we can fix this issue, but it's impacting more so the people that are going out and providing these types of BMC 85 letters of trust, irrevocable trust, cash, funding, all those things. It's going to affect them, which in turn is going to affect hundreds of small mom and pop brokers, many of which are doing the right thing, many of which who are paying their drivers and all that is just as they should. But we have an overabundance of capacity on not just carriers but brokers, so maybe this will thin the herd a little bit in terms of brokers. One of the most interesting things about this is the FMCSA removed loan and finance companies from the list of providers eligible to serve as trustees because the type of institution is not subject to the rigorous financial regulations applicable to chartered depository insurance companies and financial institutions. Which is interesting. Loan and finance companies will now be prohibited from offering trusts unless they obtain certification to operate as another type of financial institution. Which that is essentially all of those insurance or surety bonding companies where you have poor credit, but you can pay in, and they essentially, just like insurance, they assume the risk, right? So you're paying, say, $1,500 a month for your surety bond. Obviously, after 5 years, you would have paid that $75,000. But if you don't have good credit, you lose all that money, and you're essentially paying for an insurance policy because these companies that are doing it, they essentially are assuming the risk because 9 times out of 10, there's probably only 1 out of 10 companies that are going to fail, so they can eat the loss. It's the same way insurance works. The FMCSA is now removing the ability for all of those loan and finance companies from the list of providers eligible to write the BMC 85 bonds unless they become financial institutions and have all the strict regulations that those entail. Now, it would be interesting to see how many small brokers are going to be affected by this, but I could probably tell you it's going to be hundreds, if not thousands, of small freight brokers across the United States. We're talking sub-million, not big brokers. People that go out and think, they watch a YouTube video and they think they could become a broker and it's super easy, and they go out and they don't have good credit, they don't have any capital, but they go out and they pay $1,500 a month or $700 a month or whatever it is. I'm just spitting out numbers there, in order to get this insurance product. And there are huge companies out there that everybody knows. I'm not going to say who they are, but there's huge companies out there that are likely going to be sending notice in the next year or so to every single one of their small brokers saying you either need to convert your business over to a traditional surety bond or you're going to lose your business. It's ironic, really, because a lot of the carriers that have been going after this type of protection, it doesn't really do a lot to protect them because most of the bonding companies that are going to be impacted by this, and most of the small brokers that are going to be impacted by this, are going to be the mom and pop shops that are trying to do everything they can to stay afloat anyway. They're probably the ones that carriers love working with. They're probably ex-truck drivers that started a broker in an effort to get out of the truck and maybe provide a reasonable living for other ones. For other drivers. What's ironic is the people, the majority of the complaints against brokers and that we hear on social media, the majority are against those mega carriers or the mega brokers who are not going to be impacted by this at all. I mean, $75,000 to them is a drop in the hat. It's nothing. You know what I mean? So they don't worry about this. They're just putting up letters of credit with their bank, because they have so much cash coming in and out. So it's nothing. I think it's going to be interesting. Because we're going to have to wait and see what the FMCSA is going to do. Is anybody even going to challenge this? Or are they going to try? I don't think it could be challenged. Now, the FMCSA says they're going to enforce this by shutting down brokers that basically claims the trust pays out said claim, that trust level goes under $75,000. Apparently, the federal government is now going to be watching all of that. So if the trust level goes below $75,000, they're going to send a suspension notice to the surety bonding company and to the carrier. The carrier is going to be suspended, be subject to $12,000 worth of fines. And then if it's not satisfied by the trust company is going to lose their ability to operate as a bonding company for up to 3 years, which is pretty insane. So that it's going to, here's the one good thing, the barrier of entry to become a freight broker may be much, much more difficult for people that don't necessarily have great credit or people that want to put up trusts and can't qualify for a surety bond for whatever reason. It may get quite a bit more interesting because it seems that the federal government is going to hold the insurance companies liable. Now, can you imagine if they did that with like trucking insurance and stuff, right? They tried to increase the regulations on trucking insurance so it didn't cost you $30,000 a year to register a truck. Not that we need more capacity out there. I'm just saying, like, it's weird how they pick and choose what they're going to do. But like I said before, even though they put enforcement rules into place and they said they're going to fine him $12,000 and they said they're going to suspend him and they said they're going to revoke authority, I don't actually believe any of that stuff's going to happen because the FMCSA and the government as a whole doesn't have a good track record of actually following through with anything they say they're going to do. So we'll have to see. But I know there's been a lot of hubbub on this on social media, so I wanted to put out a quick video, describe my perspective on this, and I'm curious to see what you guys think. Shark can't. I'm curious to see what you guys think. Put a comment down below. What do you guys think about surety bonds? Do you think the surety bond amount should be raised to $500,000? Because I do. And I know it's crazy, right? Because I work as a broker. I work as a dispatcher and all that stuff. But I do. I believe the bonding requirement for freight brokers, especially with the amount of fraud that we have, should be up. The barrier of entry to be a freight broker should be high. Just like the barrier of entry to start a trucking company should be high. You shouldn't have to take a knowledge test to prove that you actually understand what it takes to run a truck and how to make money doing it. But I don't know. It's weird. It's weird. But yeah, leave a comment below. Let me know what you think. I'm curious.